Okay, traders, hello everyone, and welcome to this live session on SB Trade Desk. Good to be with you guys this morning. Jonas, Permendra, Eileen, good morning to you guys as well. Mark, Pooja, Leon, Jonas, great to see you guys. So if I could just get a quick confirmation. Thank you, Jonas, appreciate that. AV is good to go. So we have some things in the move. We've been involved in a couple of different scalps. We will go over those in a moment. I do encourage you guys throughout the session, if you have any questions or trade setups, feel free to throw them on the message board. We got all the time we need here in SB. Good morning, AV. Good today, says Pooja. Thanks for that. Appreciate it. Okay, let's jump right in. So the first thing I do want to go over real quick, current positioning. I'm holding something here on the Kiwi. Jonas, and I think, who else was talking about this on Twitter with me yesterday? I think it might have been Dale. Looking at a possible entry there as we headed into that 77.97 resistance target. The only thing I didn't like is that you didn't really get a momentum trigger to put you onto the short side of the Kiwi here. So quick setup, guys. We were looking at this yesterday as we were running right into this resistance target ahead of our webinar. This is post the webinar. And you didn't really get a decent momentum trigger here. I guess the 60 break would have been where I would have jumped in with a stop against the highs. Panned out pretty well. Near-term support still looking at about 77.18, which is the initial opening range high that we made for the week. So we'll see if we get down there. Kind of a light one on this Kiwi because of where we're positioned on the broader picture. Here's what the daily looks like. And so you got that nice rebound off of that low that you made. Basically, this is still the operative assumption we're trying to work with. On a closed basis, it really hasn't broken out of it. It's been pretty tighty. But as long as we continue to close within the confines of this near-term ascent off the lows there, I don't really want to get too aggressive on the shorts yet. So just a quick note on that. But let's jump into the reports and see what we've been covering here on the intraday charts. So Jonas says, I'm out now, about 73 pips. Nice trade. Nice trade. Well, I mean, you had a perfect entry on that, Jonas. Well done, sir. So the scalp reports as of late. I will go over the Euro-Aussie in a minute. We're right back at support there. But quick updates that I made last night was the Sterling-Aus setup. If you recall, as we came into the week, guys, the Monday report was really focused on this 87.67, 87.50 support. Okay, the break below that pushed right into 87. Subsequent target was 86.50. We noted yesterday that we got that trigger break, right? This was right in the webinar to the upside. So that kind of curbs your expectation for further pullback. Aggressive, guys, you're light here on the way up into 87.60. Again, you got that rally into the after-hours trades in New York. Subsequent, last night, you got this trigger break, which put us right back on the shorts. And I even tweeted this, that any exposure you take really should be against this high that you just made in early Asia Pac. That panned out pretty well. It got you the pullback again. It was a slow burner, guys, so, I mean, the trigger, it was there, but it really didn't give you much conviction on the initial move. Long story short, you would have gotten the 45 pip ATR that you're looking for on Sterling Aus. Here's what it looks like right now. So, again, the daily chart, there's that major key area of support that we were focused on heading into the week. There's the break, 86.50, which was the support target that we bounced off of, was the exact stretch high from November, and a soft target from that report. So here's what the intraday scalp looks like for Sterling Aus at this point. So the pullback off here, again, just didn't get quite into 87, but remember, you're only looking for about 45 pips per scalp. And for those of you who are not familiar with the with my personal strategy on this, so when we're looking to jump into these intraday trades, guys, we're only looking to take about a quarter of the daily ATR. So you can get this app on fxcmapps.com. I think actually this is on fxcmapps.com. And it lets you put a multiple so that you can choose what you want to sort of view here. You need to make sure that the data source is on daily, though, making sure that we're taking the daily ATR, not the 30-minute ATR. Long story short, 45 pips, so you're looking for 40, 45 pips per scalp. That doesn't necessarily mean you need to be all out at that level. But certainly near term, it suggests that at 45 pips, 40 pips on your trade, this is where you want to do something. You've taken a quarter of what the daily range has put in. And whether you're taking a little bit off the table and bring your stops to break even, or some sort of management as far as the trade position is concerned, you want to make sure you're reducing that risk once you achieve that first target. So much more, again, we're lighter in the month, so we're much lighter on the broader positions. I don't really have much to work with trying to close out, a portion of the trade. So we'll see if we can get that into the 87 region. We're out already. We took a gain about 36 pips on it ahead of that 45 target. And that's just because the break back above 50 here earlier today had me a little shook. Remember, the 50 level in and of itself in momentum on intraday can act as a decent trigger sometimes as well. Now, when that level happens with a break or a coincided break in resistance in price, that makes it a little bit more operative. Long story short, guys, this was the opening range low for the week. This is what's going to invalidate the downtrend. Okay, so we broke through key support. As long as we remain below this, you're looking for short triggers. Okay, on every subsequent rebound, we turned over ahead of 60. Again, suggesting that you want to be cautious about trying to call a low on this thing. The scenario I could see playing out here is you see momentum come into 40, this thing comes into 87, and 40 holds, suggesting that you'd be looking for a turn. Now, again, that's just speculation on my part at this point, but that's sort of the game plan I'm working with. As long as this thing continues to turn ahead of 60 and you hold below 87, 67, you don't want to get too aggressive on the longs here for sterling Oz. Okay? And in fact, guys, with what the Aussie's doing, if that does materialize, with any type of upside swing, you'd be looking for that downside thrust here in sterling Oz as well. Questions on sterling Aussie? All right. The other setups, or the subsequent setups that we wanted to cover here real quick, was the sterling CAD. A little disappointing on how this is performing right now. It does have a nice healthy range. 33 pips is a quarter of the daily ATR, what we're looking for. And what we wanted to really note here was just the basic trigger break that you got. Guys, these setups 9 times out of 10, these are going to be my favorite plays. Divergence into the lows, followed by a trigger break to the upside. This is like a textbook near-term trigger for a scalper. So here's what the 30-minute chart looked like. Okay, divergence into the lows, price action making a lower low, the oscillator making a higher low. Either one of the reference points, one above 30, one sub 30, these tend to be very strong signals. One above 70, one below 70 on a short signal, same thing. But certainly coincided with that trigger break subsequent was really, the trigger to jump into the trade. So longs were initiated with a stop against the low. We were looking for a 33 pip scalp. We didn't quite stretch right into it. I just missed my limit here. I had it just on the inside. So we had to wait it out, right into the morning. The limit hit this morning, and that was right ahead of the 60 level. It was 79.60 was actually where I had the limit, right on there. So I just barely got out of that one. Again, the major trade here, guys, on the broader scale, keeping that daily chart in view, is this major key support. Okay, I put a piece on this actually on Daily FX yesterday. I linked it on the site. You have the 618 extension off the high. You have a 618 retracement off that November low. This 618 retracement right here you're looking at is actually the entire 2014 range, guys. So if you take the 2014 low into the 2014 high, that's the same 618 that caught the lows back in October and was the opening range low here for November. Long story short, if we do see this break, the operative trade is going to be for a pullback into this median line parallel that dates back to the lows you put back in September. That comes in somewhere around 77.80. Obviously, as we move further in time, that's going to be moving up as per the slope of this trend here. But as long as we stay above this region, shorts are at risk, in my opinion. This is the same exact setup we saw yesterday, guys. So we could probably have another opportunity today to play this again if this holds into the open. And the premise is this. I mean, we looked at this momentum trigger yesterday. I noted this on the report. We were sitting right at this trigger all day as this thing was trying to break below that 78.50. That held, and we cleared the session at almost a doji. Today's close is going to be critical. Again, if we hold above this after yesterday's price action, would suggest near term you're at risk for a little bit of a pullback here in sterling CAD. So if we take it back to the near-term chart in the 30-minute, that's still the same region of support we've been testing, right? And even on this one, guys, really clean median line parallel analysis. Okay, that's right off the December highs, nothing fancy. You can see that median line catching the lows again yesterday. This is kind of where we need to see the break to get some sort of conviction for a broader recovery here in sterling CAD. That being said, above 78.50, you want to be cautious about getting aggressive on the shorts here. Questions on sterling? Tuttle with a question here says, good morning, Michael. What do you mean by holds into the open? So into the open of U.S. trade, Tuttle, if the opening range for the U.S. trade session holds that support, that's what I'll be focused on. So for example, Tuttle, we talk about the session opening ranges, right? So your 8:30, 9:30 into the open, you'll set an opening range in trade. And if that opening range breaks to the downside, that's the conviction. I never really will like to jump into positions as we're setting the opening range itself. So if you head into the 10 o'clock hour and we're still holding above this range, you're basically looking for a move above 79, and that would give us a little bit more conviction that solid support there is still going to remain intact. Okay? A couple things I like to look at, guys, just to keep things in perspective is, A, you had that beautiful momentum into the trigger break, right, which put us long. The low we made in RSI right now continues to respect that low that we made in RSI in price. Yes, we did turn around in momentum at 60, which suggests that this thing is not quite ready to break through the highs. But then on the pullback, it looks like we're finding support at 40. So all things suggesting we could be struggling to put in a near-term low here. Remember, guys, markets don't pull in a low on a drop and a rebound. It just doesn't happen that way. It's a slow, arduous process. And right now, it seems like the near-term sort of objective for us should still be looking higher above 78.50. That being said, listen, we know the levels. Everything is lined out, and this is why we map out everything ahead of hand. If 78.50 breaks out, boom, you're in a downtrend looking for that median line parallel. Now, it doesn't mean you take the short right after the break. You need to wait for recovery to give us some sort of risk management high to trade against. But that sort of paints the picture of what we're looking to do. Tuttle, does that make sense? I want to know if that sort of jives. He says, yes, thank you. I'm more than welcome, man. So we will we'll be watching that. But the focus, again, 78.50. So that is sterling CAD and the Aussie dollar. So an interesting setup, guys. I haven't taken any positions on this. I just wanted to throw these levels out for your reference last night. I just wanted to kind of note where we were. The basic premise, guys, and why I've left this the daily chart unchanged here is because the same levels are in play. All we've done is move laterally and set an opening range for the week. That's it. The Aussie is sort of like the euro. I'm in a no-touch zone with the euro completely right now. The euro dollar specifically, the euro Aussie, I think is a beautiful setup. But the euro dollar. In any event, looking at Aussie, here's what the daily chart looks like right now. Okay, I'm not going to really do anything if this thing pushes sub 80.67. Remember, as we opened up the year, this was the major key support we were coming into. So much is lined up here. And again, on a closed basis is what you really want to focus on to sort of designate these breaks. We really haven't gone below it. Yet today we're testing, but again, it has to be the close. So here's what it looks like, guys, at least in the near term. You're looking at that median line parallel that dates back to the highs that you made back in October. This is actually of 2013. Okay. You're looking at the former median line parallel resistance, or the upper median line parallel from that October decline, offering some support. And then you're looking at the lows, obviously. If you scroll all the way back from 2010, which comes in at 80.67. Okay, so you sort of have a lot lined up here. If this chart isn't convincing enough, you want to make sure that we're keeping in mind the analysis that we put out a couple weeks back, guys, on the Oz, highlighting the daily chart. Oh, by the way, that oil low, we'll talk about that in a moment. I caught some heat for that. But here's what the Oz dollar looks like on the weekly, okay? Even on a weekly basis, guys, it's a pretty big level. This is a 1618 extension from the decline off of the 2011 record highs. This is the 2010 low again right there at 80.46. Okay, so any way you slice it, you're coming into a major area of support. Even if we break below that, you do look for a run into 79.40, which is a 618 off the 2008 low, which was a much more prominent low here. If anything, we're just looking for a rebound. This break that we made late last year really, in my personal opinion, solidified the broader directional bias here, and I think you're going to see much, much further declines for the Aussie heading into 2015. That being said, right now, I'm not going to chase the south side of this trade. Okay? So I just wanted to put things in perspective, guys. This is a weekly chart, and it's really important for us, even though we're trading so intraday, to really know where the trade's at on a broader term. And this is why, I'm just hesitant to really continue to look any type of short exposure on the Aussie near term. So having said that, here's what the intraday chart looks like. We went through those levels that we were, or I threw these levels out rather yesterday on the page. We're still sort of straddling this 80.60 into 80.80 region. You're about 20 pips on an ATR anyway for the quarter. But I'm still of the mindset that this thing could easily make a nice little rally or push higher here on a corrective approach. We will see. No trades yet this week on Aussie. Hey, Dale, great to see you. It says, can you please tell me what RSI 2 is on your chart? I have RSI, but it doesn't look like yours. Thanks. So, guys, if you go to fxcodebase.com, it's RSI 2. It's not RSI 12. It's just an RSI 2. You can download this from FX Codebase. All it is, guys, is if you like using momentum like I do, it allows you to throw up those 1640 levels right on the momentum chart. Another added advantage of this specific RSI indicator is that it also auto scales. So when you turn off the scale feature here and you start to zoom in, sometimes the RSI signature will go right off the page. This auto scales it for you. So you can find that at fxcodebase.com. It's called RSI2. Actually, one of the attendees from our regular scalp webinars on Daily FX created that after using this strategy. So I hope that benefits you, Dale. You're more than welcome, man. I appreciate that. So falling out of love here with the Aussie, but we'll get a definitive break. Honestly, guys, I really hate to say it, but the 80.35, 81.50 range is what I need to see now to get excited on this at all. I know it's a larger range. There's a lot of opportunity in this range. If you want to play the momentum signatures, that's cool. But for me, again, that daily chart, if I'm not comfortable with the daily, I'll hardly ever really, try to take an intraday position on it. So we'll see. All right, so those are sort of the trades we've been focused on. The euro dollar, I haven't given you an update on that because, again, we're just in the same exact level. Now, we're scratching that 1875 low, but let me show you the intraday. So here's the break. Let me go back real quick. This was the 2010 low, 1875. We probed just below it, and the opening range low for the week came in just below. All right. So objectively, on the scalp, you're waiting for a break of that 1861 level, or the opening range low for Monday. A lot of times, guys, and I'm just going off the cuff here, by the way, a lot of times the trigger you take in momentum is better suited when you take it off the low in price as opposed to the low in the oscillator. So, for example, in a trigger like this, you got that spike, okay, that swing low that pushed RSI this low, but the actual low in price came here. Why? Because remember, guys, this oscillator is based on the closing price of each candle. So this move here had no bearing. And the best way to ascertain that, guys, is a simple move into a line chart. Okay, there's the low in price. I want to know what the trigger is. That's what I'd be using. So for that trigger there, for this trigger here, again, I'm just not seeing the follow through that makes me get excited about trying to play the short side of the euro at this juncture. Okay, in a rebound type of play or in a rebound scenario, let's just zoom this out for you. What am I looking for? Oh, in a rebound type of scenario, I wanted to move on to the Euro Oz. So I haven't really updated these targets. I don't trust this decline here, guys. If this was really a break of that key range on the daily chart we've been looking for, I think you would have seen much more follow-through. Again, Tuttle, heading into the open, you're going to want to see if the opening range here breaks. And if it pushes through that low, it might be a little bit more of a conviction type of move. But even on the daily chart, I really don't have much until 1800 will be a soft target. The 1618 off the highs that you made in October takes it down into 117.42. Euro Oz is a much more interesting play for me. Here's what that looks like. Okay, so you guys saw this one in the report yesterday on the intraday page. Lots here as well. Okay, you're looking at the median line parallel off of that August high from 2013. Really well suited. You got some nice pivots right off that region. Yesterday's low, or the Tuesday low rather, spiked right into that region. And we got a nice little pullback. It was almost like 70 pips off the low, I think, if all was said and done before the end of the day. That's the operative support structure we're trading against. Again, we're not trying to call a low here. We're looking for the signs, but I still do like buying dips into 146.30 or so. Here's what the intraday chart looks like on Euro Oz. Where art thou, Euro Oz? There it is. All right. So there was that spike, even on the near term. Okay. Median line. You got a quick break below. The rebound taking you back above that 46.40 level was coincided with a very nice momentum break after 3 tags. Remember, 2 tags speculative, 3 tags confirms. Nice trigger there. Run into 147.15 was the first target. You got the pullback here again this morning. The trigger wasn't quite as compelling. I think I was looking at this. I bring in my live charts. I think I was looking at this at the on the 10-minute chart, guys, for today's trigger on that last one. Yeah, I think it was this one. So when we're looking to actually execute the trades, guys, we want to look at a tighter time frame, right? Because remember, RSI is based on the close. So if we're only focused on the 30-minute, those triggers aren't really going to give you any type of validation until that 30-minute candle closes. Okay? It's way too long. So I'll bring it into a 15-minute, 10-minute chart. Sometimes I'll even look as deep as a 5. I'll rarely go deeper than a 5 because then you're just going to get, you'll be watching tick marks go back and forth. But 34 pips per scalp, we're not looking for too much of a bite on these as we hold within these really tight ranges that support. Remember, this is counter trend, right? This is a counter trend trade. I don't think anyone's going to argue with me right now. We're trying, it looks again that we could be making some near-term recovery. And as long as you have your proper risk management in play, I have no problem trying to play the long side. But remember, the conviction for the long side scalp doesn't come until we clear out this channel resistance. Specifically, 47.67 is the level I'm looking for to really validate the resumption of the near-term upside bias. Does that make sense, guys? All right. So we will see if we can get out of this one. I need about 7 more pips before we get into that 34. So we'll see if this triggers you right here while we're sitting together. Sandy, good to see you. Jonas, I missed a comment from you earlier, Jonas, on Aussie Swiss. I don't know if you saw my tweet on Aussie Swiss coming into familiar levels. Nothing I'm keeping a very close eye on, though. We'll take a look at Aussie Swiss in a moment. I think the Swiss trade right now is really tricky. If you look at dollar Swiss, I don't know if you guys, this has kind of been going under the radar. I was staring at this for a minute this morning. It's at a major multi-year trendline resistance dating all the way back to the highs that you made in 2006. Once in 2006, once in 2008, once in 2010, 5 years later, 2015, here we are knocking on the door again, right? So I'm kind of amazed, actually. So we'll see. It shouldn't be surprising with what you're seeing with the euro continue to fall apart. That being said, you'll have to work with the pivots for an intraday type of strategy. This is no man's land we haven't seen in 5 years. 101.90, basically the 102 level is going to be the R2 monthly. Broader trade, and again, this is a daily, not necessarily a scalp, but the broader trade, if we do break out, you're looking for 105. You're looking for 105. This right here, the 99.50 barrier that we just broke to start the year here, is the 618 from the decline off that 2010 high. It was also the high that you made for 2012, right? So lots of conviction here. It was also the close low that you made for 2009 even. So the pivot here looks higher. Right now you're checking that resistance, and it's a big level. So, so this is one of those things that I'll wait and see. You're in overbought territory, not where you want to start trying to fight the trend. Remember, guys, things can stay overbought for a day, a week, a month. Nothing says it needs to come back. It's the subsequent break sub 70 that is your trigger for the short side. So as long as this stays up here, I'm not really going to try to fight it. Just noting that we're coming into a multi-year trendline resistance, and certainly should curb your appetite near term if you're holding long exposure on dollar Swiss. So to answer your question, Jonas, to go back to Aussie Swiss, which I haven't looked at in some time, let's check that out. Okay, so I certainly see what you're talking about. The 82.30 into the 82 region has been the largest pivot we've seen in this pair since the start of 2014 trade. In fact, 82 was the yearly opening range high that we made in January of 2014. Okay, we set that range in the January month. We sat there in February, March, finally break through the highs in April, and you continued for the next 5 months into the September highs. Okay, so where we are right now is right at that same pivot zone. Sorry, I had to add that real quick. Is right at that same pivot zone. More interesting is the fact that that actually represents the exact 50% retracement of the entire 2014 range now. So you see how these things are lining up. Puts us, again, at odds here with what the Aussie expectation is. But if we do see a break above 82.30, that's the play I would be looking to make. I'll be watching dollar Swiss for this, Jonas, to be honest with you. Jonas, if dollar Swiss makes it through the highs and you see that Swiss weakness, I'd be much more inclined to favor a move into this trendline resistance to the yearly highs that we made last year. That basically, depending on where you are in time, basically takes you just shy of 83. Long story short, Jonas, you're at resistance. You're at resistance any way you look at it. Specifically, 82.30 is what I'm looking at as hard resistance. But let's see what the near term chart looks like here. All right. Bear with me one sec, guys. Let's go ahead and put this together real quick and see where we're at. So here's the opening range for this week. Okay, so there's that 82.30 level, the same 50 we were looking at. At this point, a couple things I want to do. Okay, so let's go ahead and clean this up. We'll leave that 50. Take your quick retracement off the high now that we've made Okay, obviously on this move right here, you saw the momentum hold 40-40 all through last week, 60 breaks. So you have a near-term low that is in place. Oops. Leave that 38, 50 takes you up into there. Okay. And last but not least, we'll take a quick extension off that low. We'll see if we're running into any major levels up there. All right. This is what I'm going to say. I don't like where that 100 came in, so I'm actually not going to work with that there. I'd rather work that soft target at 81.50, which has actually been a little bit more operative on this. Yeah, and that really shines the light at 83. It's tough here. It's tough here. You've been putting in some divergence as you came into these highs. So right off the bat, the rally that we saw into the close of last week, specifically on that massive gap that we made, has been fizzling out, right? Higher high, higher high, higher high, a series of lower highs. So you're seeing that momentum might be turning. On the pullbacks, you found support at 40, so you really can't get too excited about trying to short it, even though the broader trend, as we looked at on the daily chart, is at resistance. I think you're right on this one. I think you're right on this one, Jonas, in that it's not necessarily ready for anything right now, but something that we'll be keeping an eye on. Watch that daily chart for signs of near-term reversal here towards the highs. Interestingly enough, and I'm just eyeing this out, there's actually a long trigger here that I'd be interested in watching, as well as a consolidation in the top side trigger as well. Wow, that's clean too. All right, look for a near-term break of this consolidation that we've been in momentum since last week to coincide with a break either above, remember, 82.30 is the rock solid region of resistance, or near-term below 81.50 with a downside break. It might be a nice play right back into the opening range low for the week. I'm a little bit more confident, or I'm a little bit more interested to see what happens with the Swissy on this one. But that's what I'd be looking at, Jonas, on the Aussie-Swiss. Interesting pair. I don't know if it's necessarily primed for me right now, but I definitely want to see what happens with this 81.50, 82 range. Sandy, so let's look into EuroCAD now. Right, a lot of people like EuroCAD. It's interesting because the CAD weakness story just is relentless. So guys, here's a quick segue. This is what the performance of the greenback looks like so far heading into the U.S. Open. Okay, so the dollar is strong against all its major counterparts, specifically the yen down 0.9% almost at this point. Euro and Swissy and the European counterparts right behind. Loonie sort of benign here today. So looking at this, you'd expect to see the EuroCAD position move accordingly. Here's what that EuroCAD looks like on the daily. Excuse me. I think we looked at this yesterday in the webinar too, right, guys? Yeah, I don't really have much conviction of continuing to work with this pitchfork here. Unless we take it to the low that we made in early September, and that looks like it fits much better. Okay, so if you adjust this actually to that low that you made initial September, guys, there's the high. Pivot on the median line, and actually this looks like it just caught the lows. Irrespective of this pitchfork, and I don't want to stress that, is just a basic trendline support, guys. It dates all the way back to the lows that you made in 2012, I think. Yep. Another one, I think, on a euro rebound type of play as we head into the latter part of the week might be interesting, Sandy. If the CAD weakness continues to persist, or even if it takes a little bit of a break and euro decides to finally find that firm footing, remember, today's close is what's going to be important for me on the euro dollar. If it breaks and closes below yesterday's low or below the Monday swing low, I want no part of it. If it pulls back ahead of the close and closes above that, that's where I start to look on the euro recovery story. So a lot of these ideas, guys, are ideas that you need to kind of watch and wait for the right conditions to pan out before we start to really jump in. Euro Oz is something I'm still interested in. Like I said, the ones that we covered earlier, the sterling crosses look very interesting too, heading into the BOE interest rate decision tomorrow, where I think you get some volatility on those. But with the euro, especially on these pairs that are just really stuck in this major key range, listen, above 140, I'd rather be long, as crazy as that sounds. Let's see what the intraday chart looks like. Euro CAD. You guys are throwing out some interesting pairs here today. I'll tell you that much. Let's jump on the other charts. Where are they? Euro CAD. Same type of setup. I think it's the same type of setup that we're looking at with the Euro Oz, to be honest with you. Sandy says it clusters WNY S1 previous weekly and monthly lows. For the Euro CAD, Sandy, I get that. I get that, but do you see how many times? Do you see how many times we've probed below it and then pulled back? For example, we can look at a dozen examples where this thing pulled well below this region and closed much more significantly higher in the day. In fact, just yesterday we did something like that. We came as low as 140. Again, we probed lower today, and then we closed, well above 140.60. So, listen, guys, on a trade like this, if you want to play the range, I don't have anything against that per se. But if you're trying to take a longer-term stance for a move higher on any of the euro crosses, we really do need to be a little bit more mindful of the headlines and what's going on right now. Sandy, says, or will it go to 139 probably? If it breaks 140, I really don't have anything in between. I would be looking for a move deeper than 139, maybe even that 138.80, 138.90 region. This was actually... So let me take a step back. This 140.30, guys, that you see me having highlighted here, is actually the low day close for 2013, or 2014 rather, and it happened right here. So it was interesting to see that, this is actually something I remember last week I was showing, or I was talking with Jamie about, if you bring this into a close, again, save today, we really haven't gotten many breaks below that. You had that one December rip, but that's right before we went right through the 144 handle. So here we are again, and you're backed by these near-term technical features. Again, maybe it's primed, or maybe it's priming, looking for a topside trigger to play in the near term. That being said, that's the formation I work with. On a trade like this, I work with maybe a breakout play. But if you're looking at a 30 pip ATR, I think there's better juice for you on some of the other euro crosses or the sterling crosses than necessarily trying to play this thing, which since the start of the year has really been in a tight range. Eileen, I'm sorry, I missed your question on that. What do you think about the gap fill in Aussie Swiss? So with Aussie Swiss, remember, guys, here's the one thing that we want to talk about with gaps. It could probably be a great play, and specifically with that resistance, I do agree with you. But the one thing is this, the timing. right? Gaps can stay unfilled for weeks or even months before the market turns around and fills it. So, Eileen, I wouldn't be inclined to jump into a position here just because we're at resistance looking for a gap fill. I still need that short trigger, right? I could think that's what's going to happen. Analyzing the charts, I could think that's what would jive well. But what I think doesn't matter. Okay, it's what the technicals are saying. And right now, you've been in a pretty strong upstretch. Yeah, you're at resistance. I'm looking for those short triggers to jump in. Once I do get that short trigger, Eileen, or you get an outside reversal day or even an inside reversal day or something to that nature, now you have a reason to start looking lower, and the first thing you would look for would be that gap fill. Does that make sense? She says, okay, and the gap under the ML2. I thought that's the gap you were talking about, this gap fill, right? Oh, you're saying it would be under the ML. So depending, she says, yes, it has a way to go. I see what you're saying, Eileen. Depending on where we are in time, I actually think even if this thing turns around, you'd probably fill that gap before you break that ML. I mean, unless it drops into this region within the next literally 2 days, into Friday. So, but it adds emphasis to that downside target, right, Eileen? If we do see that turnaround, we see that hold, you know, your target, obviously, 80.47 is something you're going to want to watch still. If I remember correctly. Oh, I'm sorry, that was estimated resistance on the way up. So you're absolutely right. That's what I'd be looking at sort of as an initial target if we do see a turnaround. Longs into 82.30 at risk here for the Aussie Swiss. Hey, Dale, great to see you in the room, sir. Says, if you didn't look at dollar yen already, could you please take a look? If you already did, no worries. Nope, we didn't. You guys are always going to need to ask me to look at dollar yen because I hate this thing. No offense to any of my Japanese friends out there. But I just, you know, this has been a trade over the years that has never really jived very well with my type of analysis. Long story short, I think you don't get much justice out of the daily charts here. I think on the dollar yen, you want to focus just on what's happening in the near term. At least with what price action has been doing right now. And this is what I've been watching. So the only thing that was sort of well suited here was the initial weekly opening range break that you got back here. It gave you a short side bias. It was the first break sub 40 of the week. And I was with Jamie on this one, and that, you know, the short side bias here early in the week did look pretty good. Initial target's 119.40. That hit. The major support on the near term, we were looking at 118.76, 118.68. Great. The decline beyond that didn't really bottom at anything, you know, major in my opinion, which is why I really didn't like playing anything on the turn here. And even on this rally yesterday, I know there was a swing trade that was out, kind of got stopped out on that one little dip right there, and then it ripped right through again. So, you know, these are the levels I would play, guys, if I felt compelled. But I'm going to be completely frank with you guys. I really don't trade dollar yen, not as of late. You know, I'll take a stab at euro yen. Sterling yen's my trade of the year. Dollar yen, not so much. Not so much. Once we clear the highs or we make some sort of opening range break for the month, I'm more inclined to play those. But until we do, this thing could chop around here for, you know, a couple weeks before we start to make something. Is there any specific question that you had on dollar yen, guys? Do feel free to throw it out. The momentum signature for me hasn't turned constructive yet. We haven't seen 160 break in momentum since the start of the week. We've seen multiple 40 breaks, multiple holds at 60. Looks like you're testing that right now. The only thing that would really shift my attention to a long side play would be a break above 60 and a push here, and a move surpassing this region. Okay? And that's basically like, we'll call it 119.80. And if this is the proper slope, you're looking at about midday. What is this? Today's 7th. Midday tomorrow. Heading to the close of U.S. trade tomorrow. That's what I'll be looking at here near term for the dollar yen. More questions here. We have Adrius with a question. Morning, how about the sterling yen? Now we're talking. So here's what's happening with the sterling yen. Before we do that, I do want to take, whose question is that? Permendra on the British pound. We'll take a look at the pound, then we'll cross over into the sterling yen. So the pound, if you guys recall, on SB, we put out a piece towards the end of the year with the daily charts that mattered. The daily charts in focus as we opened 2015. And the sterling was the first one. 153.83 into 73. It was a 100% extension from the decline off last year's high, 153.83. A 764 retracement from the advance off last year's low, gave you 53.73. And that 10 pip range was what the focus was right as we closed. Remember, last year, on the first day of trade, we saw that massive decline breaking 55, right? So the close of that same session, guys, below it, confirmed the continuation of the downtrend in the pound dollar. Okay, your initial targets would have been that trendline support. Again, this dates all the way back to the 2009 lows. Or excuse me, we already broke that on the initial one. And then the 88.6 was 58 here, 83, excuse me, off the lows from 2013. That's where we're sitting right now. I think you probably see further declines here for the British pound. I'm not going to chase this thing beyond 50.83 here near term. Mike, would you play the bounce here? You're probably asking yourself, even on a scalp basis, would there be just cause for me to try to play a rebound here in the pound? I need to see some compelling triggers. That's all I'll say on that. Let's see what it looks like on the intraday here. So here's why I don't like the idea. Is because this is the broader declining or descending channel formation that we've been working with. The lower median line parallel breaks with this move. Okay, so the play, in my personal humble opinion, guys, is if you get a momentum break back above 30 and price surpasses 51.30 again, that's where I'd be a little bit more comfortable. You know, you designate this as maybe a quick false break here to open up the session ahead of BOE, and you play a near-term recovery to the upside. That being said, you can't get me excited about trying to buy something like that. No matter how stretched it seems, guys, don't ever underestimate. A strong trend, which is what you're seeing in this rapid dollar advance, is here. So if you're thinking to yourself, hey, this thing is so stretched, it's got to come back, and you try to jump into a position on that basis, you're going to get slaughtered, okay? You know, I would need to see a recovery above that 151.30 level, essentially putting us back into the confines of that lower median line parallel before I start to play the long side of the pound. Which what makes pound yen, pound Oz, you know, those pairs a little bit more attractive if you're really hell-bent on trading the yen, the pound rather. So as opposed to this trade, which, you know, again, I'm not going to trade the short. I'm not going to chase the short side, knowing that the daily chart has that 88.6 there at 150.83. At the same time, I don't have any topside triggers yet to jump in the longs, so we'll have to give this one. We'll put this on the watch list for now. Sterling yen looks like this. Actually, I haven't looked at that since Monday. Okay. So a turn ahead of a little bit where I wanted to. I was actually looking for a dip into 78.80 on this for a couple different reasons. This was actually what I was looking at earlier in the week. The 50% retracement off that October high comes in at 78.83. But also this trendline support that dates back to the lows of 2013, tagged once, twice, 3 times. False break, resistance, breach, and this is a very nice tell when you see something like this around a longer dated trend line. Either a gap with a break below or a break, then this thing completely falls apart. With the same respect, when it breaks to the upside, you see an acceleration in momentum. And that typically tells you that you're onto the right slope here as far as what price action is doing. So if we sort of extrapolate these slope lines, guys, to kind of give us a little bit more of a gauge of where we should be looking in the near term. Well, that's not really going to do us any good right now, but you get the picture. We were looking for a pullback into 78.80 for that reason. That being said, it's still broadly, in my opinion, guys, on a longer-term trade, this is something I think we'll see perform rather well this year. And one of the main reasons, if you looked at the daily FX trades of the year for 2015, this is the second year where sterling yen sort of on my radar. Last year it was my trade of the year, and we closed the year, not to toot my own horn, but we closed the year literally at the highs. That's not necessarily a technical play as much as it was a larger, broader fundamental play. Guys, if we look at the momentum divergence in monetary policy alone, the dollar and the yen, and in my, I would argue that the sterling and the yen are probably the biggest divergences that you're seeing right now, right? The Fed looking to possibly normalize. We're continuing to get stronger domestic data here. ADP earlier this morning ahead of the webinar came out rather robust. That print, just to give you guys a recap of what that looked like this morning, came in at 124,000. We were looking for 225. So this is ahead of Friday's non-farm payroll report. We're looking for another 240,000. As data continues to improve, expectations the Fed is really going to need to start moving on rates. I mean, it's going to start getting ridiculous. So the opposite side of the extreme spectrum is that, the BOJ still got a long way to go. The elections are out of the way. We know Abenomics is going to be the forefront here, and they're really aggressively targeting that 2% inflation target. That being said, I think broadly speaking, the sterling yen should remain rather well supported on a longer-term trade. So levels of which I'll be looking for possible topside triggers. This operative median line parallel support. Larger scope. We could get even as deep as 175, 174.40, this region right here. And that would coincide, again, with that same slope and the current, or the former opening range high for 2014. So that's sort of the broader picture, guys. I don't really scalp this pair too often. It's more of a larger picture trade for me. But here's what the intraday chart looks like for sterling yen. Let's update this with the weekly open. There's that 78.80 level. I would have loved to see that hit. And I bet you that's a perfect shift formation. Sorry, guys. Bear with me one moment. Okay. Ooh, 79.86. I should have seen that earlier. Okay. So that actually completes two equal legs off the high, which if this is just a near-term correction, which sort of where you'd want to see this thing start to teeter out as far as momentum on the short side. You know what? Who asked about this? Adrius, right? There was actually a great trigger on this that we just missed. Probably should have put this together yesterday, but looks like that is what I would have been looking at as a trigger. But it made it operative because you had that divergence. So very similar to the trade that we saw last night, right? It's the same exact thing. Momentum divergence into the lows, followed by a trigger break. 9 times out of 10, I'll take these. And in fact, even if you jumped in late, 179.67, you had to stop at 179.20, 179.18, and 40 pip stop. 50 pips is the quarter of the daily ATR. So you saw high as 180.70. Not bad. Again, you're trying to stay nimble because the broader trend still remains way to the downside in the near term. In fact, you've gotten multiple breaks sub 40. I'm not going to really deal with that Friday debacle there, but since we started the week, breaks up 30, breaks up 30, breaks up 30. Even on the rally here, if you fail ahead of 60, that's just a classic sort of exhaustion turnaround. So right now, this is actually the short trigger that's in play. Would be this. And maybe we get that pullback into 78.80 like we wanted, if that breaks to the downside. But these are sort of the levels I'd be looking at near term for sterling yen. Remember, guys, when you're in these webinars, at any point, if you see any of these charts that you like, that you want to keep for your reference, there is a camera button right at the top right-hand corner of your screen. You can always click that, and it's going to make a quick freeze frame of the screen so you can keep it for your reference later on. Interesting pair, Adrius. Hope that helps. The low is the 1.6 off the October 1st swing up extension. October 1st. Title, you talking about sterling yen? Yeah, I removed that. I know what you're talking about. Yep. On the daily, I hear you. Yeah, it was that first swing up off the October low. I've since removed that because you've cleared right through the 200% extension even. So typically, I'll start to phase those out, but those near-term levels are what to be focused on here on sterling yen. Okay, we are running out of time. I do want to jump into grab the rest of these questions real quick. Aussie Kiwi Tuttle wants to look at daily RSI break at the start of 2015. Aussie Kiwi looks like this. Oof. There's those lows, right? Where's that 100 from? That's from 2005 lows. Wow. Okay. I actually didn't even see this yesterday on the Aussie Key. Interesting. I'd have to take another look at this, and we'll try to go over this tomorrow. If you hear that, guys, that's actually the opening bell for the United States session, so we'll see how those equity markets pan out. We're just getting those first prints right now. I really don't have anything to say for you on this specific pair. The last time we looked at it, which was towards the end of the year, let me scroll back, we were looking at this formation. It's really interesting because this is actually a perfect example of slope line analysis. The initial pitchfork formation off the decline from the November highs actually yielded a very nice slope. On the breaks of those slopes, we actually extended those median line parallels to the up and lower bounds of the formation. You can see it's still there. It's still there. Um, so I'd be inclined to try to play this on a more granular basis for scalping. Selling rallies really would be the only way that you'd want to get too aggressive with it. It's been holding this formation for quite some time here. You know, I would just be playing these zones, guys. I don't want to spend too much time getting into trying to really map out the levels, because you're looking at price action. Let me take a step back. Guys, when price action is making a new 4 or 5 year high, 4 or 5 year low, when you're trying to scalp a pair like that, remember, a lot of the levels that we're looking to scalp are based on previous price action and where markets have found pivots. So when you're having to go back years to see when the last time price action was in that zone and where we would be looking, it tends to make things a little bit more difficult. So I don't necessarily want to get too, like I said, granular with mapping out the levels. More so, I really want to just focus on the structure that we're trading within. So I'd be more inclined for a short either at this upper median line parallel or a break of the actual ML. Remember, at this point, this ML now is well matured. We're talking about literally almost 3 months now at this point that it's been in play off those November highs. Till says, that is very helpful. Thank you. I appreciate that. I appreciate that, Tuttle. Always good seeing the room, man. Permendra says, thank you, Michael. More than welcome. What pairs are you looking at during the FOMC today? Adrius, we'll be looking at all the dollar crosses. And, let me take a step back first. Before I jump into that, we'll do a summary of what we're looking at. I do want to show you guys the oil trade, because this is something I think it's very, very interesting in that you're getting so much attention from all the headlines. You're getting all the financial publications talking about the breakdown in crude and oh my goodness and blah, blah, blah. Guys, we're not going to be as cocky as to think that we know where we can call the low. Okay, that's not what we're here to do. But it's important to map out these major critical levels. And all I noted yesterday, of which I got a lot of hate mail from some people, was that 47 into 47.70 is a major area of support. Okay? Don't let the sensationalist headlines shift your attention from what our discipline is. Okay? We can talk about oil's collapsing in the world. We can make a whole sensationalist headlines. You'll get a lot of hits on Twitter, I'm sure. You'll get a lot of hits on your articles. But at the end of the day, it's not conducive to what we're doing here, okay, which is trading. Why is 47 important? 47.70 represents a 618 retracement from the decline off that 2011 high. That was the high that we made post-crisis. It was above 113, I think, was the high, 114. And that 618 extension of that initial decline in the 2014 or 2013 highs gets you 47.70. More important, the decline off the record high, 2008, 47 flat, 618 extension. I only extend it so you can see it, when we're not there. But there's the 47 handle. In case that wasn't enough, the 618 ratio coming all over the place, right? You have that trend line support that dates back to 1998. All right? They all line up here. And guys, again, I'm not trying to call it low, but if you're short, this is where you want to be cleaning up the books. Okay? Taking some off, bringing your stops down, etc. And at the same respect, guys, if 47 breaks, this thing's likely to fall apart pretty quick. Even more so than it has. I do personally, my humble opinion, I do think you get a little bit of a respite here. You might not get a concerted rebound. You might not necessarily want to play the longs, but you could get a point where you sit there for a while. You could get a point like you did here in November where you sit there for a couple of weeks. That was at a key support too. So watch 47 into 47.70 for key support. Any type of long exposure you attempt, guys, even on an intraday basis, really needs to be against that critical level. Especially with today, we probed right into the 47 handle. The actual low was like 46.80 here on the spike, and here we are with a nice reversal. So we'll be watching this. Again, if we close below 47, game over. You continue to look lower. As it stands right now, heading into the close of the week, heading into non-farm payrolls, shorts into 147 at great risk here, in my humble opinion. For the FOMC, for you, Adrius, I don't really like to necessarily play the minutes per se. I think we were pretty clear with what we got last at the last quarterly or last presser. We got the updated assessments from all the voting members. We got the presser with Janet Yellen, which was really a very cautionary stance on policy. And I don't really think you'll get much out of today's minutes. The real game changer here for the week, or the real main event, let's call it, in my humble opinion, again, is going to be tomorrow. We're heading into the BOE. Not necessarily expecting them to change their tone at all. And if they don't change policy, guys, we typically don't even get a policy statement. But where the pound is trading right now, I think you might get some commentary. And then, obviously, non-farm payrolls on Friday. And with ADPs today coming out much stronger than expected, you'll see those expectations start to move higher as we head into Friday's release. So with that in mind, all the dollar crosses come into focus. The concern I had is starting to wane. And remember, we talked about this yesterday, guys. We were looking at this trade, and we said, you know what? On a closed basis, yeah, we spiked through that trend line. But on a closed basis, we didn't do jack, right? We came, right into it and held. This would be the first time that we close above it if it does materialize. And if that happens, there is fair game here for a stretch higher in the index. I'd be looking for the upper median line parallel. This is a multi-year formation. Dates back to the lows that we made in 2013 or 12? 2011, excuse me. All right. Very nice median line there. Support, resistance, resistance, resistance on the way up, resistance on that stretch in October, break. In fact, on that break in November, right after the break, we came right back and checked it as support, adding validation to it. It really puts the target right now on the upper median line parallel, which actually shapes up with the highs that you made at 11,846. And that's what the 2008 high. 2009 high. So you can see why you're at risk here heading into non-farm payrolls and into the NFPs tonight, which is why most of the reports you've seen me put out, guys, both on Daily FX and here on SB, has been in the crosses. That's for a reason. I think there's a little bit more clarity on the technical picture there because of all the event risk they have for the dollar and because of the extreme nature of how stretched this thing is. And just to go back to a lesson that we talked about earlier in the session here today, guys, things can stay overbought for an indefinite time period. This thing stayed overbought for the entire month of September. The entire month of September. We're in overbought right now, guys. We're in overbought right now. So could the FOMC minutes tonight or to this afternoon impact and curb dollar demand? Possibly. I don't necessarily think that'll be the play. I think you'd really need a little bit more of a major game changer to turn this around. That being said, guys, above 11,558, you got to be constructive. You got to be constructive. So look at the dollar yen is going to be one of the major movers. We'll look at the Aussie charts that we've been following. Those are the ones I'll be really focused on heading into that release today. Parmendra Patel, great to see you in the room. I will go over triggers tomorrow. I have to end it here, guys. We're well over an hour. It's always great to be with you. I could keep going forever, but we do got to get going. So, Sandy, I'm going to take that last thing you said. I shorted sterling yen at 1 hour, a 200 SMA trade, monthly and weekly pivots, cluster, and broke down the pivot range on the 1 hour. I do want to see what that looks like real quick. Oh, you shorted it already. Right. Okay. Are you still in the position, Sandy? Because be cautious around the 79.50, 79.68 level, just on account of not only the lower median line parallel, but also that 100 off the high. So I would just be cautious of holding exposure beyond there. Yes, I've taken some from the table. It's exactly how I would have played it. Cheers, Sandy. All right, guys, we're going to end it there for today. We'll pick it back up tomorrow for the last webinar of the week. Stay tuned. Jamie's on later this afternoon at 1 p.m. Eastern. He's going to do his midweek strategy webinar. So stay tuned and look forward to that. Best of luck trading here, guys, and we will see you tomorrow morning. Keep in mind, again, those minutes later this afternoon could shake things up a little bit, but the main event is going to be Friday's non-farm payroll report. Keep those sterling crosses that we talked about in mind as you head into the BOE interest rate decision tomorrow. We also get manufacturing and production numbers from the UK the combination could give us some volatility. Guys, with that, I'll end it. I'll see you guys all tomorrow. Adrius, thank you. I appreciate that. Sandy, Premendra, Eileen, your comments are very humbling. Thank you very much, guys. We'll see you tomorrow. Cheers.